Trend is the most important concept in trading, and if you can correctly identify and evaluate the strength or weakness of trends, you can be sure that you are always in the right side of the market. In this video, I want to introduce a perfect indicator on TradingView that helps you to identify trends and also evaluate the strength or weakness of them. To add this amazing indicator to our chart, here we click on indicators and we search trend quality indicator. We add this one, which is written by someone named Nick42. Alright, this is the indicator, and as you can see, it's added here below the chart. This indicator has two parts: Q indicator, which is this histogram at the center, and B indicator, which is this banded oscillator. First, I explain Q indicator, and then I will explain the B indicator. So we go to the settings of the indicator, and we remove the B indicator so we can better focus on the Q indicator. Q indicator is for measuring trend activity. As you can see, we have a histogram that is moving below and above the center line, which is 0. The more the histogram goes away from 0, the stronger is the trend, so less risk of trading with the trend and more reliable opportunities. But being very far from 0 and relatively in extreme levels, it can show overbought like here or oversold like here in this part, which I'll explain this later. Based on different levels of the histogram, it has different colors and they have different meaning and signals. When the histogram is between -1 and +1, the color is gray or the bar may not exist, and this shows that there is no trend in the market. In other words, the price is moving flat. When the histogram is between +1 and +2, or on the other side between -1 and -2, the color is yellow, and this shows very weak trending of the price, which could be probably starting point of a larger movement. For example, having them in the range of +1 to +2 and being in yellow color, it shows weak advancing of the price, and in this case you can see that the trend developed and it was a strong move, which I'll explain these two colors later. But for example, in this case here you can see that we have the histogram between -1 and -2 and being in yellow color, which shows weak declining of the price, but again the price went flat after that. So having the bar in yellow color is just a very weak movement of the price. Alright, when the histogram is in the range of +2 and +5, the color is blue, and when it is in the range of -2 to -5, the color is orange, and these show moderate movement of the price. So when the bars are orange like here or here in this part, we can say that there is a moderate declining of the price, and on the other side, when the bars are blue, we have moderate advancing of the price. And when the histogram is above +5, the color is green, and when below -5, the color is red, and these two colors show a strong trending of the price. So when the histogram is red, it shows a strong declining of the price, and when the histogram is green, it shows a strong advancing of the price. So basically, values above +2 or below -2 are our point of interest that can show the starting of an advancing or declining of the price. In other words, from the time that the bars turn to blue, or on the other side, when they turn to orange, it can provide us the opportunity to catch the movement of the market. But it is not always the case like here or here, which are just very short-term declining or advancing of the price, and we can also be at the end of trends, which I explain it now. As I mentioned earlier, the more the histogram is moving away from the 0 line, the stronger is the trend. But when it is relatively very far in extreme levels, like here in this part, or another example like here, it can show oversold or overbought condition in the market. Because this indicator is an unbounded indicator, so it is not very suitable for identifying overbought and oversold conditions in the market, because you always need to evaluate it relatively. Let me show you an example so you better understand it. For example, here, relative to the prior range of price movement, this level can be oversold, but for example here, which we have a wider range of price movement, this level is oversold. So I recommend using another indicator in conjunction with this for identifying overbought and oversold conditions in the market. Here we click on indicators and we search RSI, this one, Relative Strength Index, which is one of the best indicators for identifying overbought and oversold conditions in the market. Alright, let me show you how you can do this. From here, you can see that we have blue bars, which show moderate advancing of the price. So around here could be a potential entry point for you if you have a buy signal from your strategy. If you have a buy signal around here, this indicator confirms it, and RSI also confirms it because it is above the center line. And from here, the histogram became green, which shows a strong advancing of the price, and at the same time, RSI became became overbought. And please pay attention that when you have overbought reading of RSI, it doesn't mean that the price is going to instantly turn to the other way. No, RSI can remain overbought when the price is strongly advancing. The signal of weakening is from the time that RSI crosses below 70, or to give the price action more room in case if this is just a small pullback and the price is gonna advance more, we wait for the crossing of RSI line below the center line. This is a higher probability signal that this advancing of the price has ended and we can have a change in the direction of the market. As you can see, it was true and the market went to a trading range. And similarly, when the indicator is showing a strong declining of the price and RSI showing oversold, we know that there is a probability for reversal, but we wait for the confirmation. And here you can see that RSI line crossed above the center line, which gives us the signal that probably this downtrend ended. And as you can see, it was correct and the market went to a trading range. As I mentioned earlier, by the help of RSI, you can be able to identify overbought or oversold conditions without evaluating the charts relatively. For example, here for this short advancing of the price, here you can see that RSI is showing overbought and then here it crossed below the center line. So we can say that probably this advancing of the price has ended and we can have a reversal to the other side. By having RSI in conjunction with this indicator, you can effectively identify changes that are happening in the market. Alright, now let's go to the settings of the indicator and turn on B indicator and see how this one can help us with trading. B indicator is an oscillator that is moving between 0 and 100. B indicator doesn't tell you anything about direction of the market. It only tells you if the price is trending or not, and if it is trending, how much is the strength. When the line is below 50, the color is gray and this shows range market. You can clearly see that whenever the line is gray in an extended period, the price is moving flat. When the line is in yellow color, it shows weak trending of the price. When it is blue, it shows moderate trending of the price, and when it is green, it shows a strong trending of the price. As I mentioned earlier, the B indicator doesn't tell you anything about direction and it only tells you if the market is trending or not and how much is the strength if the price is trending. It is giving similar information like Q indicator, but with Q indicator you have also information about direction of the market, so you can simply turn it off and use Q indicator if you also need to know about direction of the movement. It really depends on your trading strategy. If you're going to use also this indicator for direction identification or you have other indicators in place that you want to use them, this indicator is a perfect choice for trend following strategies where you can use this indicator as a confirmation for trending or non-trending market. And by having also RSI, as I explained earlier, you can manage to enter or exit your positions exactly when there is a potential change in the market. This indicator can also be used in breakout trading strategies where you can identify a range market where the price is consolidating and then entering a trade when the range is broken. By evaluating the strength of the movement, this indicator could be a perfect complement to price action analysis when you want to trade breakouts. Please pay attention that this indicator is not going to make your trading strategy free of false signals. No indicator or strategy is capable of this, and losing trades are always part of the game, no matter how much accurate is your strategy or how much experience you have. So you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategy that you can use. I have a complete guide on this. The link is also placed in the description and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.